Good afternoon, everyone, and good morning to those of you joining us on the West Coast. I would like to welcome you to today's online presentation titled 2013 Outlook, First Quarter Update. Now I would like to introduce you to our speakers. We have Armen Kevorkian, Vice President of Alpha Investment Research, and Tim Barron, Chief Investment Officer. Now I'm going to turn things over to Tim to begin the presentation.
Great, thank you. Well, I put the disclaimer up on the screen here. Thank you all for participating, and happy Friday. Let me kind of describe a little bit of history here. As many of you know, we've been publishing this annual outlook since 2009, with many of our clients seeking a pretty concise representation of our perspective on economies and markets. Now, this represents our first formal quarterly update of that annual review. It's something that we'll now be doing each quarter, and clients seem to appreciate these updates. What we'll go through this afternoon or this morning, depending on where you are, really represents a focus on the changes in that annual review. If you would like to access that larger document, you can do that on our website, which is siegelrc.com. Hopefully most of you have done so and have gone through all 85 pages or however long it is of that annual piece, and I assure you this will be a much more rapid review of our thoughts. So first, I'm going to go through this update myself, summarize the global environment, and then focus on how that might change our perspective on where clients should be focusing their investment portfolios. And then Armen is going to, in some detail, review the most substantive change, which regards our thoughts in high yield. So let me start with the U.S. The position we had taken is that there continues to be substantial uncertainty in economic direction, and that probably is easily represented by the contrast in what the World Bank is saying, and this is yesterday, and I quote, "The recovery is on more solid ground in the United States, where a fairly robust private sector recovery is being held back, but not extinguished by fiscal tightening." And then the U.S., the Conference Board, whose U.S. economic forecast calls for 2013 real GDP growth to be less than what was actually had occurred in 2012, with particularly with the sequester reducing size of government. They have an additional expectation that real capital spending is going to decline fairly substantially year over year in 13. So, you know, even from some of the folks who are calculating the numbers, if you will, there's certainly, I believe, an expectation that there's been progress, but that it's been painstakingly slow, and that the economic direction in the U.S. is still quite uncertain. Interest rates low, but future increases expected. Feel a little prescient there because obviously we're seeing that. Armen is going to cover that a bit more later, but certainly we have a pretty volatile interest rate environment that we're living with. Very little progress on the unemployment front, quite stubborn structural issues embedded in that, and again, fits and starts in terms of progress towards that particular goal. The U.S. housing market recovery appears to be continuing, but there are certainly issues outstanding there. There are a lot of foreclosures still overhanging the market. The lending process itself continues to be difficult. Prices have gone up, but it's on relatively modest sales inventory, and now mortgage rates have gone up, while still fairly low, have gone up pretty substantially in a short period of time. So the market has recovered, but there continues to be some issues there. In North American energy, that's certainly been a positive. Those environmental questions regarding fracking and oil shales continue to exist, and some of those advancements in technology have not been broadly embraced. You don't have to look past New York State, right around the corner from us in Connecticut, to see evidence of that.